This is Ruben Lowing here in McAllen, Texas. It's Christmas Eve. Leadership talk today. I got a fast start going to happen. My new associate, she's very excited. She's got a sales background, and she's one of them people that was sitting there like thinking about what can I do to change my situation. And then she talked to me. She ended up talking to me, and she's very excited about what we're doing, what we do, and she wants to get on all the Zooms and everything. It's like, okay, yeah, this is how it's supposed to be, right? Something that comes up and a lot is this comparison with WFG and Dave Ramsey. Okay, so I like Dave Ramsey. I think Dave Ramsey has an incredible leadership prowess and understanding. He's missing something. It's two-pronged. Okay, one is he's stuck on the whole life, like everything's whole life. Universal life is whole life. It's not. Okay, why? The difference is whole life. When you pay your premium, your money goes into the insurance company's general account, and they pay you about the same as you get in banks, savings or CD. They like 3 or 4%, I guess, is what they claim, and it's you pay for your whole life. Okay, you don't pay enough. Theoretically, you could pay enough into it, you could overfund it, and you would have that, enough return to keep up with inflation. Okay, but most people don't do it like that, and but if you're somebody who's you're old enough, or you're still in decent health, but it's the cost of insurance is you're not going to let your money grow, but you want to have coverage, then you want to pay into a whole life. Okay, like Everest or Gerber or someone like that. All right, to have the coverage. Okay, but it's not going to be like for retirement. It's going to be a end of life services. It's going to be to cover things that your family needs taken care of if you're not around. Okay, that's what that's for. The universal life, it's a flexible premium. You can overfund, and depending on how it's set up, like that originally started off, it was mirroring the 10-year treasury, which was like 10% at that time, which was a decent return. But then when interest rates went down, because that's what mortgage interest rates are tied to, then it didn't become so sexy. Then now they're starting to index it to different indices, like the S&P 500 or the Russell 2000 or whatever, and those they have guarantees. They have a floor. Okay, it could be 0, could be 0.75%, could be 2%, whatever, right? And they'll have a ceiling. Now there's some that after a while, like I have Pacific Life, after 5 years, the ceiling is gone away. There's no ceiling, so sky's the limit. Whatever the market's doing, but I don't have any losses. I have a 0 floor. Okay, so that makes a huge difference. And then with those, there's the tax advantages through the IRS code 7702 alpha, which you're not going to get in anything else. And when you have your money in an insurance contract, it doesn't count against your kids, when it comes to like the FAFSA form. Okay, if you're getting a divorce, the court can't get at it for an asset to be distributed to your spouse. There's some protections there. Okay, so those are some things he's missing. That's part of it. So the tax advantages, and then the living benefits, like money for long-term care or catastrophic illness. You're not going to get that from any other asset, not real estate, not stocks, bonds, mutual funds, nothing else. You can put it in a trust, and you can have that be it's still not going to be the case, because you got the whole financial power of the insurance company that's backing those guarantees. So that's a big difference in the two mindsets and strategies. Okay. Yeah, you might pay fees, all right, but there's no, if you're not paying fees, there's opportunity costs, because usually those kind of accounts, like your bank savings and checking, aren't getting, they're not growing. There's no growth there. And then there's there's protections where there's not when it comes to the those bank accounts. Okay, so, or stocks or whatever, right? So those are the big differences, which nobody seems to point out, which I'm doing right now. All right, Merry Christmas.